Hey everybody, good to be here today. It is Tuesday and time for long options. I'm joined by Connie Hill in the chat. Connie's helping me out. I appreciate her. She's a longtime veteran of the markets, and I encourage you to check out her webcast as well. In fact, tomorrow I'm actually going to be out of office, and she's going to be teaching managing an options portfolio for me. So I appreciate Connie on that. I invite you to check that out as we manage option trades in that class and talk about general options management. That occurs each week. Normally I'm teaching that, but Connie's stepping up and helping me out tomorrow. Today, I want to talk to you about scanning for flag patterns in this class. This is long options, so the goal will be to scan for flag patterns with the idea of doing example trades on long calls or long puts, because that's this class. Now, you can follow me on X. You can follow Connie on X as well, at Brentmore CS, at Connie Hill CS, and we post additional content throughout the week there. And there you go. I want to get to the stuff that we really need to get to here. But before, I need to hit a few disclosures. The options do carry a high level of risk and are not suitable for all investors. And the information today is for general informational purposes only. It's not an individual recommendation of any security, strategy, or chart pattern. And Schwab does not recommend the use of technical analysis as the sole means of investment research. But we are going to be talking about a fair amount of technical analysis today, but just realize there's other ways of doing it as well. The paper money application is provided for educational purposes only. For the sake of simplicity, examples may not include commissions, but keep in mind that they are real and something you should consider. All investing involves risk, including loss of principal. Past performance of any security or strategy does not guarantee future results or success. And there we go. I think that's it. Oh, no guaranteed execution of a stop order will be at or near the stop price. That's probably one I should call out for you there. So my goal today, show you how to trade potential flag setups. So I want to start by doing that, but I want to focus on using the Scan tab, the Stock Hacker, to do so. Now, look, what you can do is, as you're looking, you can just go through charts and try and find the pattern and just scroll through the S&P 100 or something like that. That's great. I do that quite often. I just kind of scan through charts. But if you want, you can use the Scan tab, the Stock Hacker, to assist you in that journey. And when you create a scan there and you like that scan and you save that scan, when you pull it up in the future and you go over here and you go to your watch list, that scan will be sitting right there in the watch list and it'll bring up the stocks that are in that watch list. So here I have just as an example, I have a rising RSI below 70 uptrend scan. I created that originally as a scan, but when I click on that, what it's going to do is it's going to show me all those stocks that meet the parameters of that scan. Okay. Well, the parameters of the scan we're going to work on today are different than that scan. They're going to be looking for flag patterns. Well, there's different ways to look for flag patterns, but let's start with what a flag pattern is, for those of you who aren't aware, and then we'll talk about how to scan for them, and then we'll talk about how to trade them. So that's going to be the kind of series that we're going to go through here right now. When we talk about flag patterns, they can be bullish or bearish. In the case of a bullish flag, generally we're looking for an upward trend. Okay, so upward trend. So stocks go up and then they pull back. And, a lot of times in an uptrend, you see something like this. And when it looks like this, very often what you'll do is you'll say, hey, look, if it bounces, it did it in the past, it bounced like this right there, and it kind of went up like that, and then it pulled back, and maybe it's going to bounce again and do something similar, and then potentially go up. That's the flag pattern, okay? So in other words, and there's a couple parts of this flag pattern I want to point out. One is the flagpole. These long upper portion, this is a flagpole. This is a flagpole. There's your flagpole. And then we talk about the flag, it's this pullback. Okay, here's the pullback. And I'll show you some real life examples of what this kind of looks like in just a sec. But when we're talking about a bull flag, That's what we're talking about. With a bear flag, it's just the opposite. In a downtrend, often it goes like this. And you'll see, the stock will be doing this. And sometimes I'll say something like, is that flagging right now? And this is what we mean. Bearish trend, bear flag. It's a bearish pattern is how we generally interpret it. And then we'll say, maybe, this isn't really changing trend necessarily. This is just flagging is kind of how we'd often put that trade, with the idea that that it's going to bounce down at that point. Okay, so that's kind of the schematic or the conceptual approach to what a flag is. But let's look at kind of real life here. Let me do this. Here's the S&P 500. And you can see, S&P 500, it went down, it kind of went sideways, went down, sideways, down. Those are kind of bear flags, okay? Bull went up, went down. There's a flag, went up, kind of flagged, went up. Maybe right now we're flagging a little bit, perhaps. That's what it looks like. We'll look at individual stock examples on this. But when we're using this scan tab, the stock hacker, we have to ask ourselves, what is it that defines a flag? Well, number one, it's a trend. So we're going to try and put in parameters in the stock hacker that first define the trend. For a bull flag, an upward trend. Well, how are we going to define an upward trend? There's different ways to do it. But here's what I'm going to show you, okay? And this is not the one definitive way to look for a bull flag or bear flag when we get to that, but this is just a way to do it. But what I'm doing is this. I'm going to say, for a stock to be in an upward trend, it needs to be above both its 50-day moving average and its 20-day moving average. Here I have a 20-day exponential moving average, okay? This is a 50-day simple moving average. And if the stock is above those, then I'm going to say, at first glance at least, it's going to be in an upward trend. Okay? Now, sometimes the stock happens to, not be in an upward trend and happens to bounce above those moving averages. Fair enough. This is just a first glance. We're going to look at stocks and see whether we like them or not from that standpoint. But that's the trend. That's the first thing we're going to look at for our stock hacker. We're going to look for that trend to be going up. But that's not all of it. For it to be flagging, it isn't just going up, it's actually then pulls back a little bit. Okay? Well, how are we going to define of it pulling back? Again, there's different ways of doing so, but I'm going to use those moving averages a little bit. And in this case, what I'm going to do is, I'm going to say this. I'm going to add on one more moving average here. Let me just do that. Let me go to, that's not what I want. Simple moving average. And I'm going to say, if we go to a really short-term moving average, say 5 days, let me get a different color on here. We'll do, I don't know, yellow. We should probably be able to see that. Okay, so we'll apply that. Here's a 5-day moving average. Let me make that a little bit thicker here, just so we can see it a little bit better. We'll go to 3 on that. Maybe I'll make it a little brighter too. When we make that brighter, it's a nice bright yellow that we won't miss. Okay, there we go. So when it's flagging, what I'm saying is we're going to be above our 20 and our 50-day moving average, but it's going to temporarily dip below that real short-term moving average. That's what I'm going to be looking for. Okay, fair enough. We'll look at that on individual stocks. Now, we may go through this and you may go, well, I want to tweak your scan there, Brent, that you create. Fair enough. And if you want to create it with me, you can. If you don't, no worries. I'll share the scan with you when I'm done with it. Okay? We'll share that scan. So what I'm going to do is I'm going to go to the scan tab. And we just started off, this is just a generic scan here. Okay? We're using the scan tab stock hacker. We're looking at individual stocks that are meeting a technical pattern, not with the idea in this case of trading them for just a stock trade, which of course you can do, but actually as the starting point to do an option trade. For bullish, in the case of a long call, and for bearish, looking for a long put. But what I'm going to start with is this. I'm going to say, look, here's a lot of stocks, but most of these aren't going to be appropriate for trading options. Look, that's a penny stock right there. Okay. That's not that's not going to, a lot of really low liquidity stocks. Probably a lot of them don't even have options there. So what I'm going to do here is I'm going to do this. I'm going to say, instead of all stocks, I'm going to narrow this down. And you can do this. We're not even adding filters here at this point. I'm going to clear out my filters. Okay. I clear out my filters. And to start off, instead of all stocks, I'm going to say S&P 100. I'm going to go to public, S&P 100. Now, maybe you've created a watch list in the past. I've talked about this in the past of just some watch list of liquid stocks that you're interested in. You can put your own personal watch list in here. In this case, I went to public S&P 100 stocks just to narrow it down. My problem now, you may be going, what about S&P 500? If for options, I'm trying to just stick with more liquid stocks, so I'm doing S&P 100 here. But you can do whatever you want. But just realize, before we even get to adding filters, you can add it up here. Now, some people may do like penny increment options. You can do that. Okay. You can add other parameters. I'm going to show you another parameter that we can add to try and help with the liquidity here. And if I were just to click on that, I should get approximately 100 stocks. Okay. There we go. So we're scanning in the S&P 100, but we're going to start adding some filters here. I'm going to click on Add Filter. I'm going to click on a stock filter. And for options, what I want to do is I don't want really low price stocks. Now, S&P 500, this may be kind of a superfluous step here by saying I want the price to be at least the ask price to be, or the last price, doesn't matter really, to be honest. We can do last price to be at least $10. I don't know if that's going to reduce the list at all here. It doesn't, because if by definition, if it's in the S&P 100, it's $10 a share. But just realize that you can add these parameters to try and help get rid of this really low price stocks. And with options, a lot of options traders don't like to trade really low price stocks. Okay, let's move forward. Let me show you the next one. I want more liquidity. So I'm going to add a filter, and I'm going to add a study filter. These study filters, I don't think are going to work in paper money. They'll work on your live platform. So just be aware of that if it's giving you kind of an error message when you click on study. So just be aware of that. But I'm going to click on study, and I'm going to go down to volume, and I'm going to go down to average volume, and I'm going to say I want the average volume to be at least 5 million shares. Okay. This is, let me just make sure I got my decimal points right there. Yeah. Okay. So 5 million shares. Okay. Let's narrow that down. Oh, we just cut out about a third of them. Okay. The least traded of those S&P 100 stocks we just knocked out. Okay. You can ramp this up a little bit. You can make this 10 million shares or something like that a day. But my point is, we're doing option. This is intended for options. We want higher liquidity on this. Now, so far, we have not addressed the whole moving average thing yet. I'm going to show you how to do that. Hopefully, not only does this help you with the idea of trading flags, but hopefully it helps you learn the Stock Hacker a little bit more. Stock Hacker is pretty simple in its basic form, but we're going to actually go a little bit more complex here. And I'm going to go to a custom filter here. So I'm going to add filter. I'm going to click on study. I'm going to click down here. I'm going to click on custom. Okay. Now, here's what we're going to do. It defaults to ADX crossover because that's just the first one on the list there. I'm going to delete that out. I'm going to click add condition. Okay. What's our condition? Well, our condition is we want the stock to be greater than the 50-day moving average. We want the stock to be greater than the 20-day moving average. We want the stock to be less than the 5-day moving. So what I'm going to do is I'm going to click on select a condition. And when I talk about this, I want the stock to be above it, I mean the price of the stock. So I'm going to click on price. Okay. And I'm just going to say the closing price of that stock, I want it to be greater than, okay, is greater than, closing price of the stock is greater than what? Well, I want it to be a moving average. I'm going to click on select a condition. We'll do this again here in case I'm going a little quick here. I'm going to click on, what is it? What's a moving average? Is a moving average a value, a function, a price, or a study? It's a study. So I'm going to click on a study. I'm going to put on just a simple moving average. So simple moving average. And what did we want? We said a 50-day moving average. I'm going to change that length from 9 to 50. We want the closing price to be greater than the 50-day moving average. Let me save that. There we go. You know what? We can add more than one study on here, more than one condition on here. I want to click on add condition again. I'm going to do something very similar. I'm going to go to price. I'm going to go to closing price. I'm going to say it's greater than. In this case, though, we said I was going to do an exponential moving average. Okay, so I'm going to click here. That's a study. An exponential moving average is a study. So I'm going to type in exponential moving average exponential. Okay, and we said that was going to be a 20 period. Oop, in the wrong place. Let me put that in length. 20. Okay, 20. We're going to save that. Okay, we have two conditions. We're going to do one more because we don't just want the trend to be up. We also want the stock to actually have flagged. In other words, come down a little bit. So I'm going to add a condition on there. One more, and we're going to do something similar. We're going to say the price, the closing price. In this case, it's less than. And I'm going to click on condition, study. It's going to be a moving average. And this is going to be, I'm going to make another exponential moving average, exponential. I think on the other page I did a simple moving average. Exponential moving averages react a little bit more quickly. So I'm going to make it a 5-day exponential moving average. We're going to save that. We're going to click on OK. And we're going to scan again and see what results we get. We got 7 results there. Okay? Let's look at those results. Okay? Let's look at those results and see what we got. Okay, so CRM. Let me take a look at CRM. See if it meets kind of what we're looking for here. CRM. Okay, there we go. This is a little bit cluttered here, I guess. The stock is above our 2 longer-term moving averages, our 20 exponential and our 50 simple. It is below our 5-day moving average. And this actually, to match the scan, it should be a 20-day, excuse me, an exponential moving average. I actually made it a simple, I think, there. But you get the point. So do you see how this works? Okay. Do you see how this works? We're above the longer term moving averages, we're below. That's our flag there. Let me zoom in just a little bit here and look at this. Well, that's kind of what we're seeing. Stock is going up, kind of pulls back a little bit. Well, look at some others. We'll look at the other examples we have on our list here. Let me go back to the scan tab and Meta. Well, we got Meta and Wells Fargo. Let's take a look at those and see if it kind of looks like what we're looking for. Meta, stock is going up. Let me zoom in a little bit. Does that look like a bull flag? In my mind, that looks like a bull flag. So when you see something like this, we're going to ask ourselves, not only does it meet the conditions of the scan, but does it meet what my vision is of a flag pattern, a bull flag pattern? Okay. In this case, I would say yes. And then often what we'll do on the bull flag pattern is we'll say, well, once we start to break out of that, we're going to get out. And what I'd say is maybe break above the highs of that. And we may do a sample trade there, but let's look at the other stocks and just kind of get a sense for this. Wells Fargo, Capital One. And I'll go a little quicker on some of these. Wells Fargo, zoom in. Does it look kind of bull flaggy? I would say, yeah, that looks kind of bull flaggy. Our trend is up and it's kind of gone in this sideways pattern. Flags sometimes go up and go, and then the stock kind of goes down like that. Sometimes it's more of a sideways-ish flag. We'd still call both of those a flag. And so this is what I would look like. That'd be kind of our bull flag. Where would an entry be? Well, I think for a lot of traders, it would break right above right there. Okay. And George is given a good tip there in the chat for those of you who aren't watching. If I add a SIN 2 column, in fact, I'm going to take a quick tangent here because it's a really good point here. If I go here to my results and I customize these results and I say send to orange because I have my charts linked to orange. Let me move this up a little bit. Look at this. Now, when I click on, say, Capital One, I just click right there. Look what happens. When I click on the chart, it goes right there. You see that? Hey, there's Capital One. Does that look kind of flaggy? Yeah, I'd say that looks pretty flaggy. There's our trend up. And we've dipped down below. That's a flag pattern. I can draw that flag pattern on here if I want, just like this. Boom. And, oh, okay. So there's kind of the flag, and our flagpole was from low to high. All right, so there, does that look like a flag? There's your flag. Okay. All right, let's go back to scan. And so AMD, let's see how it looks. We'll go through this quick. Kind of same thing. It wasn't a downtrend. It looks like it's reversed uptrend flag. Okay, so I may not go through all of these here, but you guys get the point on this. Let's talk about doing a trade on these. But here's what I'm going to say. I'm going to share this scan query and with you, in case you didn't build it with me, if it's one you're interested in. Those of you who built it all along with me and have it right now, what you do is you go to this little 3-line menu. There's 3 of them, little hamburger sandwich menu, whatever you call it, right up there. And you can just save the scan query. Now, I've actually already saved mine, I think. I already have one similar to this because this is one I've used in the past. But you can always click Save Scan Query. It's going to come up here. And we're just going to call this bull flag. Okay? So I'm going to save that. There's my scan query. Okay? And let me share the scan. Share the scan query. Share. I will put this in the chat for those of you who are watching in the chat. Remember, scans are not guaranteed. These scripts are not guaranteed for timing or accuracy. And for those of you who are watching on a recording, here's the scan. That's an exclamation point 4VDDY2KV. It is case sensitive. So you just need the exclamation point on if you want to add that scan, okay? And once you save that, once you save a scan, when you go to watch list over here, what you can do is you can go to personal, bull flag, we just saved that scan, and now voila, it brings it up right there, brings up all those stocks right there for you, okay? So I'm hoping that answers that question. Hopefully that helps you out there on that. If you want, now feel free to tweak it, you know, and I'll tell you this, these all actually looked pretty flaggy on these, pretty much like a flag on these, bull flag. But sometimes you'll come upon some, this isn't a foolproof scan. Sometimes you'll come on some and you go, that doesn't really look like that much of a flag to me. Great, skip it, move on right by. Okay, so there we go. Now let me just check questions, and then let's look at potential trades here. Okay, so Question. How did I get the 7 column? George answered that. That was the SIN 2 column. I did SIN 2. So look for SIN 2 there. Thea says, what is the study condition on the moving average? We went through that at the beginning of the session, Thea. So it's probably going to take too long to go through right now, but if you just rewatch this webcast, I do go through that. Plus, you can also go to the scan, import that scan, and then you can click on it and you'll show. So, okay, basically, our conditions are above the 20-day, above the 50-day moving average, below the 5-day moving average. Those are the study conditions. Okay, let's look at a potential trade here. I'm going to call that a flag, okay? Flagpole, how big is the flagpole? Well, the flagpole goes from the low, about 117, let me just jot that down, up to the high, which is about 133. That's a $16 flagpole. And I'm only going to get in this if we break above, though. If we break above our flag, which is right about here, right about where that moving average is. So I'm going to say 131 is going to be my entry there. 131 entry on that. That's where we're going to get in. Okay, does that conceptually make sense to everyone? This was our low to our high. Here's our flag. We're only going to get in this long call if we break above that upper portion of the flag. In other words, we get that bounce. The expectation is the length of the move may be as long as the initial flagpole. So we'll just duplicate that flagpole and we could say that's a target. Now, we may not even use that as a target. Maybe we just do the prices based on the option instead. In other words, if we do this trade, I'll get into this just a little bit more in just one sec. Okay, so Gazelle said, good question. Why do I need to wait for the breakout? You don't have to wait for the breakout. Okay, so that's a good question. Gazelle said, why do we wait for it to break above there before we get this? And the reason is some technical traders like confirmation. It's what we call confirmation. Confirmation that it's actually going to bounce before it does. Because sometimes, you do this and it just kind of keeps going down and down and down. Well, look, that's just a possibility. That's like one possibility there on that. But a lot of traders do like to wait for that confirmation there. So there you go. Okay, so let's do that trade here. I'm going to go to Morgan Stanley. Now, how long do we expect to be in this trade? Well, how long was the last one? Well, it took a couple weeks maybe to do it. So we'll want to go a couple weeks and maybe a little bit more. I'm going to go to the trade tab. I'm going to go out a couple weeks, maybe a couple weeks more than that, just to give it a little extra. I'm going to go to the monthly options here. Okay. I'm going to go to the calls. I'm just going to go at the money here on these calls. So I'm going to right click on this. I'm going to buy custom with an OCO bracket. Okay. So there's our potential trade here, but we're going to tweak this a little bit. What happened to thought I pasted that into the scratch. Oh, I shrunk down the scratch pad. There was that. I think you guys already had a chance to do that. Okay. So we're not getting in right now, though. You can if you want, but if you want to wait, what I would do is you can say, I'm going to make it a market order. I'm going to make it a good till canceled order. And I'm going to click on the gear. And I'm going to say, I only want to get in if MS marks greater than or equal to 131. 131. That's ensuring that we get a little bounce there on that. Yeah, there you go. Now, here's another thing I can do. I can say, look, I have a stop order here. I'm going to click on manual here, and I'm just going to put in trigger, okay? And I'm going to make our stop, I'm going to put our stop at 50% of our entry price. Trigger, 50% stop, okay? And let me just make this a little bit bigger here. And come on. There we go. Okay. And I'm going to say 50% of my entry price. We don't know what the entry price is going to be yet, do we? No, because the entry price on that option is only going to occur after the underlying stock hits 131 or above. Okay. So now some of you are saying, can you put it based on the stock price? Yeah, I do that most weeks in this class. Most weeks in this class, I do trades based on the stock price. This one's just going to be based on the underlying option price. We're getting in at market only after the stock goes above a certain price. We're going to get out if we hit 50% on that. And I want to maintain a good reward to risk ratio. So I'm also going to get out at a limit price. I'm going to make this a percentage. It kind of defaults to this plus minus. I'm going to make that a percentage. And I'm going to say 100% gain. What does that mean? Okay, and those are both going to be good till canceled, by the way. Good till canceled, good till canceled. Let's say we get in at a price of, I don't know, $4 on the option. Well, 100% gain on that would be $8 if the stock goes to $8. In other words, we've made $4. That's our potential reward on this, okay? What about our loss? If we're getting in at $4 and we're out at 50% of that, we're getting out approximately at $2. Now, I say approximately. There's no guarantee on stops, folks. This could gap down and this could go to zero. But that's the assumption. We're going to try and get out at that stop price there. Okay. So I set the buy price at if the stock goes above 131, the underlying stock. Okay. I don't know the actual option price when that occurs. Okay. We don't know that yet. And so that's why I did this based on a percentage. This is a little bit different than what I do most weeks in this class. I wanted to show you that little variation there on that. Okay. Okay. So Rachel said, why is it a market order? Well, okay. Because if I put in a limit price, let's say I put in the limit price where it currently is right now. If the stock goes up, that price will probably be exceeded and it will never fill at that point. Now, I could, as Connie mentioned, George mentioned in the chat, you could theoretically figure out what that price is using the Theo Price tool. Okay, right up there, there's a Theo Price tool. I'm not going to take the time to do it right now, and figure out what that option price would be if the stock goes up to 131. Stock goes up to 131 and do a limit order, but this is just a quicker way of doing it, okay? So there you go. Let me just see any other questions there. I think that answers questions there on that. Okay, it looks like, Christopher, you got your question answered. Thank you for helping me out in the chat. I'm going to send this order. Confirm and send. I'm going to make sure you read the red areas. We're going to put this in our long options, long single options category. Okay. And there we go. We sent that order. There we go. Okay. Here's our working orders on this. This is the order. Question from HD. Why is this negative? These are closing out positions. If we enter and we buy one, we're going to be closing out by selling one or a -1. That's why those are negative there. Let's look at I want to change this to a bear flag scan though, okay? So let's move on. Let's think about this. conceptually, again, let me put up a different chart here so it's not as cluttered. Okay, here's SPX. What would we look at for a bear flag? Well, let's go back in time here. In terms of a bear flag, we may look for a stock that's below its 20-day moving average, below its 50-day moving average, but temporarily jumped above its 5-day moving average. That would be a bear flag. So what we can do is we can go to that scan, we can take the existing scan and modify it. I'm going to keep the S&P 100 there. Okay, I'm going to keep the last price at least $10 on the underlying stock there. I'm going to keep the average volume where it's at. But I'm going to, because I want high volume, I want liquidity. On bull trades or bear trades, I want that. But this needs to change. So I'm going to click on the little pencil or pen, I don't know what that is, little edit button there. And we're going to tweak this. Okay? We're going to tweak this. So before we were looking for a close that's greater than the 50-day moving average. Well, and by the way, Thea, your question earlier, what were the parameters? Here are the parameters. Okay. Close, before we were looking for a close above the 50-day moving average. Before we were looking for a close above the 20-day moving average. Well, I'm just going to edit these. And instead of saying greater than, I'm going to say it's less than. Save that. Close is less than the 50-day moving average. I'm going to edit this. Instead of greater than, it's less than. I'm going to save that. This one, it's less than the longer term moving averages, but this real short term 5-day, we want it to be greater than. So I'm going to edit this and I'm going to make it greater than. I'm going to save that. Those all look okay. I'm going to click OK on this and I'm going to run the new scan. Should give me different results. And in this case, it's going to be bearish. Hopefully, we'll see. Here's UNH. Bearish? Yeah. Does it look kind of flaggy? Bear flaggy? I would say so. Let's go and let's look at the next one. And okay, evidently you lost me for a sec there, everybody. Sorry about that. We were looking at UNH. UNH, bear flag. Okay, bear flag. Let's look at the next one. CVS. Going down below our moving averages, bear flag. Let's do the next one. Let's go to BMY. And I'm not going to go through all these, just to kind of prove to you this is what this scan does right now. Now, sometimes when we're in a very bullish market, you may not get any, you may not get many bear results. Or if you're in a very bearish market, you may not get any bull results. In this case, we're getting both of these. Here, what I'm going to do is I'm going to right click on this and I'm going to save this scan query. Okay. So let me click Save Scan Query. Now, before we had it saved as a bull flag. Well, I'm going to call this bear flag now. Okay. Bear flag. We're going to save that. And let me just, for some reason, when you save it, automatically zeroes it out, but we're going to do that again. And this time, what I'm going to do is I'm going to share that scan query. And this is going to be bear flag. Bear flag. We're going to share that. And I'm going to click on this. I'm going to put that in the chat for those of you watching live. Remember, the scans aren't guaranteed for timing or accuracy. For those of you watching on a recording, I'm going to put it right in here. Okay. And so exclamation point X in, that is, ooh, this is a tricky one. I'm not sure if that's an L or an I. I hate it when it does this. I wish they wouldn't do that. That is either a lowercase, I think that may be a 1. And then that's an L, TG4W. Okay. So this is the bull flag. This is the bear flag. You can use those. Okay. So that's a trend here. Let's do a quick trade perhaps. Here's Pepsi. Okay. Trend down, kind of flagging. Where's my entry? Well, I'm going to say my entry is breaking below our lows of the most recent period here. Okay. On flag patterns, okay, so that's going to be my entry if we break below there. Now, we could do the traditional target measure if we wanted to. Right? We could say, look, flag, we're going to measure that out and do that. Another thing we could do is we could just say, look, we hit down here. About 127.87 was our low. 127.87 was our low. I'm gonna exit here. That's gonna be my target. Where am I gonna exit on the, if I stop, am I gonna put a, well, I'll put a stop above my broken, this, I'm only getting in if I break below here. So this is presumably gonna act as some resistance here. But I'm gonna say, if we break right above those highs, I'm gonna get out. Okay, and so let me just get that price here for you. And because we're running out of time, 132, we'll say 133. Okay, 133 is going to be my exit on this. The stock right now is about almost 132. So that's our entry, is going to be breaking below 131. Okay, 131 entry. Let's do this trade just based on the underlying stock price. I'm going to do a put here. It's bearish. I'm going to go at the money. We're going to go 132. I'm going to right click on this. I'm going to buy custom with a stop. We're only going to enter this trade if the stock closes below 131, or sorry, not closes, marks less than or equal to 131. 131. We're going to get out of this trade if the stock, I'm going to click on the gear, marks, Pepsi in this case, marks either below 127.87. Going to do it. Let's try that again. 7.87. Or if it marks greater than or equal to, this is kind of our exit if things go south on us, if the stock goes above 133. We're going to save that, confirm and send. Make sure you read the red area. I'm going to click on add that to long single options, send, and there we go. Okay, so question from Giselle. Good question. What's the expectation? The expectation of these trades in terms of number of days is look at the past flags it's done. Now, they're not always going to be the same. How long did it take for that flagpole? It took about a week. How long did it take for this one? Oh, maybe 2 weeks. So I would expect this trade 1 to 2 weeks, somewhere in that range. Okay, that's how we're going to measure that expectation there. Now, one last thing here is this. We have another trade here that we did in past weeks. PayPal. We bought it at 545. It's now at 820. We had a stop. When we entered, our stop was at $3. I'm going to tighten that stop up, folks. we've made some money on this. It's not realized gain, but I don't want this to go way back down to $3 before I stop out in this case. So I don't have time to do it right now, but what I'm going to do is I'm going to move this stop up to try to help protect some of the gains on this trade here on PayPal there. Okay, that's a past trade from a past class. Thank you very much for joining me today. No survey though, but Connie, thanks for helping me on the chat. You're a rock star. Everybody, coming up next, we have getting started with technical analysis. And everybody have a great rest of the day. Thanks for joining me. We'll see you same time next week. Bye-bye.